A common currency is not a new idea, but there's a new potential common currency that threatens to topple the US dollar, and that's the one that will be shared by BRICS nations. As of the start of 2024, the BRICS group had additional members to make it a serious contender to outmuscle the G7's financial power. If those nations, which include the likes of China and India, decide to join forces on a shared currency, then the dollar would be significantly under threat. For decades, the US dollar has been the international reserve currency. But with many countries now seeking an alternative and BRICS adding new members, are the dollar's heydays numbered? The addition of Egypt, Iran, Saudi Arabia, and the United Arab Emirates to BRICS signifies a strategic step away from the United States and Europe. For the new BRICS members, this opens the door to new opportunities for trade and investment with the bloc's founders. It also leaves the same door wide open to offer an opportunity to decrease their dependence on the US dollar and give them more flexibility to counter US political and economic pressures. Some BRICS officials have already called for the bloc to wean itself off the dollar entirely. This process wouldn't be easy, but it's possible and promises significant rewards if these emerging nations were to join forces with not only their resources, but their currency as well. In this video, we're going to take a look at how we got to this point of dollar dominance and explore the potential for an alternative that might see the end of the USD as we know it. As of 2021, the dollar made up 60% of globally disclosed official foreign reserves. This share has declined from 71% of reserves in 2000, but still far surpassed all other currencies, including the euro at 21%, the Japanese yen with 6%, and the British pound at 5%. It may seem as though the dollar is already on the turn, as the greenback's share of official FX reserves fell to a 20-year low of 58% in the final quarter of 2022, and 47% when adjusted for exchange rate changes. However, the dollar still dominates global trade. It's on one side of almost 90% of global foreign exchange transactions. But the threat to this currency is real. With the addition of the new 6 countries, BRICS Group could control 42% of global crude oil output. It would need to overcome the fact that the dollar is used in over 70% of all international trade, more than 90% of oil trades internationally, and the 90% of currency exchanges we've already looked at. But the push for de-dollarization has already started, so this is far from impossible. The US dollar has been the world's primary reserve currency since the end of the Second World War. Under the 1944 Bretton Woods Agreement, members of the agreement fixed their currencies to the dollar, the value of which was tied to gold. This gave much-needed stability to the globe after the war. In 1971, however, the US, led by Nixon, abandoned the gold standard, unsettling the international economy by threatening to undermine the value of the dollar and the reserve holdings of many countries. Since the 1970s, the free-floating dollar has continued to serve as the world's main reserve currency, dominating international trade and banking. Even with flexible exchange rates, US Treasury bills have shown themselves to be a dependable, low-risk investment. The demand of the dollar is helped by the depth of the US financial system and the size and diversity of its stock market. On top of this, the dollar's easy exchangeability has kept transaction costs low. All of these factors have made the currency super reliable and worth investing in. But not everything is as rosy as it seems. Central banks and fiscal policy makers have become more and more concerned about their dependency on it. The things that make the rest of the world twitchy about it are the uncertainty about US political stability and policy continuity to broader economic shifts relating to great power competition. Soaring US debt and domestic political contestation over budgets, debt limits, and foreign policy also provide issues for governments around the world. And for developing economies, the strength of the dollar in recent years has weakened the competitiveness of exports and raised the costs of servicing dollar-denomination debt. Central banks are also not keen on the US and their tendency to use sanctions to weaponize the currency. Before, this used to be with small rebellious states, but now with Trump's sanctions against Iran and Biden's sanctions against Russia after the invasion of Ukraine, these have impacted more countries more broadly. And with China, many fear that the US will employ sanctions to undermine its big rival. Because of the risks these sanctions pose to their own economies, central banks are looking for ways to decrease their dollar dependence. And this is where BRICS comes in. These nations have a slew of reasons for wanting to set up a new currency. Recent global financial challenges and aggressive US foreign policy have led BRICS countries to explore the possibility. They want to better serve their own economic interests while also reducing global dependence on the US dollar and the euro. But when would a BRICS currency be released? There's no definitive launch date as of yet, but the country's leaders have discussed the possibility at length. During the 14th BRICS summit, held in mid-2022, a new global reserve currency had been suggested by Putin at this meeting. A year later, Brazilian President Lula da Silva also showed support for a BRICS currency, commenting, "Why can't an institution like the BRICS Bank have a currency to finance trade relations between Brazil and China, between Brazil and all the other BRICS countries? Who decided that the dollar was the trade currency after the end of gold parity?" Although no formal announcement has been made as to the introduction of a new currency, it's clear that one is being discussed. Many experts think that a shared BRICS currency will be a significant challenge. Expanding the BRICS to its new members, which are some of the major oil-producing countries in the world, will open up new avenues to trade in local currencies. But it might also invite some complications as the dollar still rules the oil market. Also, a big issue is that China is a trading hub for other BRICS nations, and it often doesn't see eye to eye with India. Besides these challenges, the convertibility of the BRICS currency with every country holding more of each other's currency and reserves is among other critical challenges, to name a few. But the steps to overcome these challenges have already begun. China and India are seeking to build international demand for their own currency. Like the US before them, they have put a lot of their eggs into the oil market, attempting to negotiate non-dollar oil sales with large producers, both to guarantee their oil supplies and to increase the demand for their own currencies. China has targeted Saudi Arabia, seeking a deal for oil in yuan during the 2022 Riyadh summit. In 2023, India agreed doing a deal with the UAE for oil in rupees. These are all small steps that will help BRICS countries to develop a shared approach to economic policy, including agreements on debt and public spending limit. Transparency around economic data and monetary policy is essential to build trust among international investors and trade partners, as these were factors that were essential in the dollar's rise. There is still work to be done, however. Brazil faces economic and political instability, and its currency has been devalued several times over the past few decades because of deindustrialization. Oil-dependent Russia has seen growth decline and will face more restrictions as war spending increases and sanctions continue to hurt. India is bound by rigid bureaucracy and resistance to market-orientated reforms that are popular with its people, maintaining capital controls and often resorting to export restrictions to manage inflation. China has taken steps to promote the convertibility of its currency, but the economy is continuing to slow, and there's a potential real estate dive around the corner here. Finally, South Africa has its own issues with slow growth, high unemployment, weak infrastructure, and unsustainable public spending. The new BRICS members also have their own challenges. Saudi Arabia and the UAE remain massively dependent on oil. Egypt faces an impending economic crisis, and Iran is struggling to emerge from a decade of sluggish growth that is further held back by US sanctions. Meanwhile, Ethiopia is in the middle of a civil conflict and broader economic instability. While the economic potential of BRICS countries is very attractive to investors, they'll need to provide the financial depth and market security offered by the American economy to rival this currency. If they can do this, then there's no doubting a new currency's value. As BRICS economies grow, the US-China relationship deteriorates, and the US expands use of sanctions, countries seeking flexible trade and investment across borders will need a reserve currency that competes with or replaces the dollar. If the BRICS nations can mobilize and find common ground, then the dollar's dominance may well be at an end. For more videos on the most important topics from the world of economics, please subscribe to Tree's Economy. Thanks for watching.